Hello friends, welcome back for Bitcoin Technical Analysis. I'm your pal, Rocky Outcrop, and we're going to take a look at the charts in just a second. You can see the current price above my head, $6,802. But before we dive on into the charts, I thought I would share with you why I'll be holding a fish very close to my heart for the next wee while. It's because we have 345 subscribers, and when I saw that this morning, I couldn't help but think to myself, 1, 2, 3, 4, 5. Once I caught a fish alive, 6, 7, 8, 9, 10. Then I let it go again, and that's right. Until when we get up to 1,000 subscribers, I'll let that fish go. But for now, I'm holding it very close to my heart. Thank you very much for subscribing. And wasn't that a bit of a weird start to today's video? So it's Sunday. What's been going on in the charts? Well, not a great deal, to be perfectly frank. And I keep thinking to myself, I'll come along here, and of course things will have changed somewhat, and I'll have something different to say to everybody. But I don't particularly. We're still going along as we have been before. I just thought there's a couple of things that we could do in today's video, because well, I saw when I opened up YouTube earlier from some other people in the world that some people are now starting to talk about an ascending triangle. So if we take this red line, draw it in here, and take a red line and stick it at the bottom of our channel, you could say, hey, look, we've got this ascending triangle formation on the go here. And I think they're a little bit sort of late to the party, really, in terms of looking at looking at how this has been shaping up over the last wee while. We've kind of had these ideas in mind in terms of the general overall structure of the market recently, that we've had highs in at the top here, which would be your top end of the ascending triangle, or we know that there's been significant resistance and profit taking action happening around those prices, and we've had this upward sloping trend line below here, as we've had upward sloping price action over the piece. And we're looking at this general area here and asking about whether or not we'll be able to get higher highs above this sort of 6,900 area, for instance, at any given time, break up to the middle of this channel and go on up and try past this 50% retrace and all sorts of stuff like that, if that's to be the bullish scenario. And then, of course, if we're going to, if this rally overall is going to fail, as we've seen this downward sloping volume over the last wee while, then if the volume were to increase on the way back down the way, then you could be looking at various other scenarios and drop downs in various different prices and different ways of coming up with reasons for where the price could go, including measuring this channel, measuring a potential sort of formation you could maybe have inside, like such as a head and shoulders, or just like looking at this like a bear flag. And we've talked about various different things. And what does it kind of boil down to in a way as well when you see this happening is this sort of chat is, if we go down here to the sort of 3,900 price point, then of course then we'd be breaking the massive Gartley that we've had on the charts drawn in from starting over here in December 2018. We'd be breaking this crab formation that we got started drawing in on December 19, for instance, and those patterns would become invalidated, and that would signal a fairly hard fall to the downside. And various other things, when we take into account, like these patterns here that are drawn on are kind of visual representations of the overall dynamics in which the markets tend to operate, and drawn out with specific sort of parameters around them to give them a name, in the same way that the head and shoulders is sort of a dynamic that exists and can repeat itself under similar conditions in various different markets. And then you can look back at it and you can say, hey, this is what this was, and this is how this operated, and sort of put it in our boxes like we like to do as human beings, of course. And whether or not you want to say, hey, we've got this ascending triangle here, and this is your top line up here somewhere along here, say, and that channel shows you roughly where the bottom is, so then you were to take a measured move, so you actually just went as far as the wick here, and you were drawing it using the entire wicks, and then you stuck it over on this side here and said we're going to drop down, then where are you to be looking at? And we know certain various areas, for instance, 3,150 or so, where we saw our sort of bottoms of the market back in December 2018. And I don't think you really need to have too much sort of, don't need to deep dive into the reasons behind why getting down there would be, would shake the market, and then potentially if there was further downside, how people would be feeling at that point. I think we all kind of get those extremes. On the way there, of course, you've got things like this really deep retrace level of the 886 here at 4,300 or so, and that would be a big psychological barrier for a lot of people as well. You could imagine price profits taken if there was to be a drop down there. But I think that the enthusiasm for this idea of the ascending triangle obviously comes from its statistical likelihood leaning towards the breakouts towards the top side, and where you could have targets coming in for those, and they're not really all that different to all of the profit taking targets that we've said on the way up here, and then your next big chunks up here at the next Fibonacci retracement points, the C of this crab, and then looking up towards the A point of the crab, and the C point of the Gartley there, that area of 10,500, and of course that's previous highs and everything else. We already know all about these different things and where the prices could be going, and should they go beyond that, you could even be looking up as high as sort of 14,000 and all that sort of crack. So it's something kind of like to talk about in terms of the YouTube land, and so you see a lot of that going around at the minute, and it's kind of from people who don't really have all that much skin in the game necessarily, who are able to look at those sorts of things and talk about they've got a lot of skin in the game. Sorry, not saying they don't have skin in the game, but are not so much necessarily concerned with things like it moves, between areas like, for instance, a solid 5.5% move up towards 7,259, and considering whether or not that would be a breakout or a fake out, and how you would look at that under those circumstances, where you would be at that time, how it would shape up versus the previous price action, and whether or not you'd have volume coming in with it, and stuff like that, and if you'd have divergence on the go or whatever. So you don't have that. On the 24-hour chart here in the stochastics, we can see that there is sort of bearish divergence as it happens. On the RSI, you can see that across these tops here that there isn't that bearish divergence. Incidentally, there isn't any continuation divergence. On the DMI, you can see we haven't turned around quite yet. We know that if the prices were to go above or below, if the prices go, kind of above 7,000 areas and are below 6,600 area, to be looking again and kind of coming back and checking in on the BTC 1 exclamation mark chart. That's the CME's futures Chicago Mercantile Exchange, and seeing if there's a gap being created there, and just sort of then taking that into account going forward, should that be the case. We know in the bigger picture as well to be bearing in mind, but you've got the 236 over here in the GBTC chart that comes in at 7, and we're looking as well at 6.5 and 6 area to see if there would ever be a gap filled down there towards the downside. We know on terms of Fibonacci's and stuff like that we've got right here we're just below this Magnolia line, the 50% retrace from having come down to our lows and then back up again, and we're above the 236 on that Fibonacci there. But if we look to other Fibonacci's, for instance, this Fibonacci here is quite interesting. As you can see, if you were to draw it in from down here at the swing lows in December 2019 up to our highs in Valentine's Day, as you can see there, just demonstrating that, then the prices came down as far as the 1618, which was something that we were looking at the time whenever that hit down there, and thought, oh, is that where you could get a bullish reversal at that point? It's not uncommon, and then you've got other people out there in the world who are talking about things like this being a bump and run. We spoke about it as well on the channel ourselves, and I've seen some prominent YouTubers and Twitter people talking about, let's just get a line here, move it after, talking about this here's like it's their thing, and I don't know, I don't get it. I don't know if people sort of like to sort of, if it gets you more followers or whatever on YouTube and Twitter and the like, if you were to say talk about a particular price target and say like, I'm really bullish, I've been really bullish since down here, blah blah blah. I don't really know. I kind of talk about things just kind of honestly and try and be professional about stuff, and well, this is how it pans out. We've if you've been following along with the channel, then you know that we were kind of looking when the prices came down here at where the prices could be going for upside and everything else, and we've been talking about taking profits along the way, and we've been doing all right. So I don't really know. A lot of sort of like, this is sort of part of this whole FOMO thing. Anyway, as you see, you can see here, I've been struggling for the last like couple of minutes as I've been trying to get this red line here to line up with the top parts of this to make it into the bump and run strategy or pattern yet again. I don't know if I stick it on log. Do we get some sort of, can we get it to fit better? No, it's funny that even though we had it on the channel recently, it's like this comes down to the subjective nature of charting it again. Even when you've done something yourself in the past and you try and stick it back on there, it just doesn't work. If you want to see the bump and run video, just search perfect bar bottom or whatever it was, BARR. You'll see it in the channel there. It wasn't that long ago where we kind of went through this. Anyway, I'm not a massive advocate for this or convinced of it necessarily, and as well overall I just feel like that it can really be kind of summed up if you don't know what it is in general, just by saying like you just have a downward sloping trend line and you break above it and then you look to see how prices respond around that. On the way there you probably had various other things happening anyway, but you've got this whole thing by Bulkowski, the bump and run reversal bottom, where you're supposed to have this lead-in pattern connecting up here at the tops, and then it comes down. Let's just sort of draw it in kind of badly so we can actually have some sort of effect on the go. Then you get a bump here off of this line, so this is why it's called the bump and run, and then it bumps, so you come back down again, for instance, then you come up through, break through that line, and then run off again. And when you see that happening, you're supposed to see an uptake in the volume, of course, as well as it's supposed to line up properly and everything else. I'm not succeeding at making it do that. We did have it going on the go before, so if you want to see that video, like I was saying, where I had it on there. But it's just not working out for me right now. And like I say, I don't have much faith in it till such times as you've actually done this whole bumping and running thing, in which case to be looking at other sort of factors. I mean, you can't help but see this big magnolia coloured line that we have in the background here is like other targets from previous Fibonacci's and stuff like that. You know that there would be areas anyway that you'd be looking at, and it's like sort of pick your sauce really when it comes to patterns sometimes and what people are looking for. And I don't know why you'd want to stake your whole sort of like Twitter and YouTube reputation on something like that, unless it's just the way that some people work. Some people have got that sort of like that attitude, and that's totally fine. It works, and it's nice to see people be confident and whatever, but I don't know, I don't get it anyway. We're not seeing this big uptake in volume and all the rest of it. It's not happened yet anyway in terms of that. And where really are we? Like this is the 2-day chart. You can see here, if we do actually manage to get a close in, like just to follow in from yesterday's video, I suppose, where yesterday's video is quite good. It's got everything you really need in it. Like I said, maybe that's the title of it. So this is more of a supplemental here today. Thanks very much for joining me. By the way, I really appreciate you spending the time with me here watching this. Massively appreciate it all. The likes, comments, subscribes, and everything else. So if you want to do any of that sort of stuff, that's amazing. I really appreciate it. Anyway, what we were talking about before is that we still haven't had a higher high on the 2-day yet. If we get prices closing in here, like we were kind of talking about, that sort of 6,850, and that, then 6,800, I suppose, here in this 2-hour or the 2-day time frame, then you'd be looking at that having had a higher high, which is good to see, and it means that this is sort of convergent here below with the oscillators. It's convergent here below, and things are kind of ticking along, sort of in your general uptrend, you could say. All right, and then if you look down at the 24-hour time frame, as we were saying, as well, looking to see if we've got higher highs coming in here and how then that would shape up with this. Well, that's looking until such times as we get a low, of course, then that's going to remain looking like slightly bearish, but that doesn't really matter because the prices we haven't set in the high yet, so to speak, in inverted commas. So that's not happened yet, so that's not the case. And if we look to the RSI, then we can see it's not divergent. These haven't really, while the positionally, the sort of the negative and minus have turned around, the trend hasn't turned around yet here. So all that, and we've also seen as well in recent times the VPVR. I could stick it back on, but we know that there's going to be drop-offs in trading activity and whatnot between areas where there's been lots of volatility like this in the past. So things makes other levels kind of more crucial and stuff like that as well. Do you want to say this is an ascending triangle and sort of buy into any particular sort of FOMO? Cool, that's totally fine. Just want to point out the sort of the FOMO aspect of it, and that really in today's video, if there's one takeaway is like if you just draw an ascending triangle here and then start thinking in that breakout mindset and everything else, then you're kind of ignoring all the chat that we've had recently. And you never know with these things being subjective. It can go, like somebody says, prominent YouTubers, like it could break out in 72 hours, and that's the case. Yeah, of course it could. I'll have to see how things go. but then it could fake out in 72 hours, come back in again, reshape the thing, and have a different sort of shape to the whole overall aspect of it. And of course, it doesn't take much to change one pattern into another pattern. It really doesn't. So just as a sort of final sort of shout out and reminder to people that you could easily do things like, hey, you could say that this was more of a sort of ascending wedge thing. You know, like we've had this is ascending wedge, and let's make it so that they're not even joined, so you get that sort of wedgy feeling about it. Falling wedge, ascending falling wedge thing there typically would be would signal continuation here to the downside if that were the case, and that's sort of a pattern. So always take everything you see with a bit of a grain of salt. Enjoy your Sunday. Have a nice weekend. Thanks very much for tuning in. I really appreciate you coming in and spending the time with me here today. And we could have looked at the smaller time frames and all the rest of it, but it's all going to just be the same sort of confusing story that's out there. And we looked at all the dynamics of everything that you really need to see recently enough. Anyhow, you've got a bit of bearish divergence on the go, by the way, on the smaller time frames. If you wanted to be aware of that, don't get caught in any fake outs and all the rest of it. And I'll catch you in the next episode. Thanks very much for tuning in. Like, comment, subscribe, all that jazz, and share this with a friend if you've got one that you think would like it.